Fellow traders, 'tis I, the Rumpled One, coming to you on Monday, March the 10th. The year's 2025. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And a friendly reminder, always have your risk management in place. Never lose more than you're willing to lose on any one single trade. So let's take a quick look here. We're looking at the weekly chart on the pound. It had gapped down. It's filled the gap. But we still have three pairs that have not filled the gap so far this week. We are 26 pips above the weekly open, about 7 off the high and 66 off the low. If we zoom out to the month, you can see we've got a big green bar here. 7 pips off that monthly high, 360 off the low, and 360 pips above the monthly open. We're putting in the opening range for the day, and as you can see, we're above the opening range for the month, and the opening range for the month is above the opening range for the year. And for the year, we're 429 pips above the yearly open. We're 8 off the high and 839 off the low. We are above the monthly, daily, and weekly inside bars here on the pound. So those happen. Daily was 14 days ago, weekly 11, and the monthly was 14 months ago. So it's been a while. For the range for the day, you can see we've got a bunch of pairs over 100, but the pound's sitting at 72. It's almost stuck in the previous day's range, even though we did break above the previous day's high, I think, by a pip. Did we break below the low by a pip? Let's see.
It's close.
No, we missed it by it's like 7 points. But the high we broke out by it's like almost 2 pips. The launch pad has failed about 2 or 3 times, so this price just might turn around and go the other way. You can see we've crisscrossed the daily / weekly open today. Buy zone traders were rewarded in both directions. And you red rats, get ready to feast here. We're just crossing the smart rat level, and 2926 is the original rat. Bambino flex indicator said to go long. That reminds me, somebody wanted me to discuss the Bambino flex indicator. I'll have to do that one day this week. Pivot trading plan said near the pivot is long. We hit that pivot, and that would have definitely been a profitable trade. So we still have 3 missed pivots from last week. We'll have to drop if we want to hit them. We are in the upper wick zone of Friday's daily candle. We popped out a couple of times to the north, actually 3 times to the north, and 1, 2, 3, 4, 5 times to the south. So we'll see where we end on the day. Once again, the weekly range is 72. We broke out of the high by 2 pips. We did not break out of that low. And Walmal, we had some questions on the flip-flop trade because I had it on a screen that had, I guess, some other indicators, and the trader didn't said he left with more questions than what he started with. So I have a clean chart. All it has is the flip flop box. Um, in fact, you had a nice experience with flip flop boxes before we made the video.
I did. Yeah. Well, it started off not so nice, but when was I went in, got a flip flop, and I took it south. I mean, took it north, and market decided to go south. Um, I then got another flip flop right after that, and exact same thing. I took it to the north, and it went south. And then I went and added in more flip flops. Just kept on taking the flip flops, And eventually, what happened was I got a nice big bar got put in, and got me into profit on all the trades I was in. And by the time I was done, I was up a bunch of pips. But that's the beauty of one. There's two things there that one reason why it worked out that way or worked out well for me, I believe. And the first is I didn't take any trades just for the sake of taking trades. I was taking trades because I had legitimate signals. That's the first thing. And the second thing is I wasn't sitting there on the very first trade, taking a trade where I was risking everything I was able to risk. I taken my trade and let's say I'm allowed to go and risk, I'm one lot on a particular trade. Well, maybe I'd go and sit there and say, okay, I'm only going to risk 0.1 or 0.2. And that way I've got room to go and add in more trades later on, either as an add-on because the trade's going in my direction, or as a way to go and average in because I got an additional signal. And by doing that, employing those two methods together, it gives me the freedom to go and do that. Because more times than not, can it happen? Yes. But more times than not, it just doesn't, the pound doesn't just dump, 200 pips, 300 pips in one particular direction. It'll go down, and then it loves to find the middle. I don't know why it does that, but it just loves to find the middle. What I mean by this, if the pound is running up, eventually during the day, somewhere along the way, it may not get to back where the opening was, but it's going to come back down, and start running towards the middle again. Now, if you think about it, that's the whole premise behind, your rat reversal trades. That's what I think you saw with that. Just I'm employing it a little bit differently than you are, but it's the same. It's the same idea. If, for whatever reason, when an instrument runs away, it always likes to come back, and come back towards the middle a little bit, and for you, it's that type of thing with the rat reversal trades. You want it to go, and it's that I believe you used to use like a 20 pip margin, if I would remember correctly.
Right.
And then you just by doing that, it just ensures that you can make some pips. Well, I'm doing the same thing. The only difference is I'm using it as a money management tool.
And we
So
just got a flip flop.
question.
Yeah, we just got a flip flop to the north here.
Yeah, and that's sort of like, if you just look at the chart right now on the 1 minute chart, you had a white bar, then you had a black bar, and then you had a new white bar come in where it broke. It either broke the open of that black bar or it broke the high. Depending on, you can do it either way. It depends on your risk. How much more risk you're willing to go and take. Excuse me. But you can do it either way. Some people would say, well, do you do it on the high or do you do it on the open? That's up to you. You need to figure out what you like to do. The advantage of doing it on the open is that you have the chance of more, getting more pips. The disadvantage of it, of course, is that it's, a lot of times when it gets to an open, it likes to go and run back the other direction for a little bit. So it may not be as good a chance for it's going to go and run the way you want it to run. But either way, in this case, it's the type of thing where excuse me, I got tickle my throat here, but in either case here, it just it worked but it only works by 1 pip or so. You know, people say, well, you can't make money on a pip. You can if you got big enough load.
Yeah, that's for true.
You know, but the thing is, it doesn't work. It doesn't work every time. No, and I never said it would. Never say, and I'll never say it will. You know, it's just one of those things where you just go in, you take chances, and it just seems that more times than not it works. That's all I can say is more times than not it works. And right now we've got a flip flop that's set up to go south. That just shows you how many of these trades, get set up. I mean, in the course of a couple of minutes here, we've already had 2 trades set up for it. And in this particular one, if you took it at the open, actually you would take it at the close because it's a downward trend. You could have picked up, 2 pips. So you could have basically, by the time you paid commission and everything else between the 2 trades, you could have picked up, 2 pips or so, or 3 pips.
Yeah, and
you say, well, it's only.
Yeah, go ahead.
I was just going to say, again, people are going to say, well, you can't make money on 2 pips or 3 pips. Yes, you can. You just got to, 1, either make up a lot of them, or 2, you have to have a bigger load size. And the reality is, during a day, it is not inconceivable that you could pick up 50 pips doing this if you're just consistently doing this throughout the day and that means that this trading, people think that trading is you put a quarter in the machine and, $1,000 bill pops out. And no, there's real work here. Sometimes you got to, when you work, you got to work for your boss. Okay. You don't show up at 8 o'clock and go home at 8:02 and get a big paycheck. No, you wind up putting in some time. Well, sometimes you have to put in the time here as well.
Yeah.
You were going to say, sir?
Yeah. That's what some people don't understand, like I used to tease you about stacking bricks, and pretty soon you got a wall.
Yeah. Just one brick at a time.
Yeah, exactly.
And that's what trading is. It's just take the trade, if it wins, it wins, if it loses, it loses. Move on, next trade. Take a trade. If it wins, it wins, if it loses, it loses. And you just, and as long as you're going following your rules, you're not violating the most important thing, which is your risk management. Eventually, you wind up with you've built a nice little building or a nice little wall, but you just got to do it consistently.
Yeah, that's it. You have to be consistent, and you definitely don't want to be greedy, because the minute you try and get that extra pip, it will bite you. The voice of experience.
Yeah, this is before we were trading, but I was trading a little bit earlier than you. This type of thing. I was in a trade and I was up, 4 pips, and I was so convinced that this thing was going to go and break, do your launch pad thing, even though that wasn't the reason I was in the trade. I was so convinced, and I was up 4 pips. And the next thing I know, it dove on me. Instead of being up 4 pips, I was now down like 10 pips or 15 pips, something like that, because I was so convinced. And I was, just being honest about it, I was being greedy. And that's what, I don't care how long you've been trading, you're going to make those mistakes. But as long as you don't violate your risk management rules, you can get out of that. And, and because I followed my risk management, followed my money plan, I was able to go and add in on those trades. And guess what? They all turned out to be winners in the end, because I was willing to go and do that. I did not go and violate the biggest rules.
Right.
And we should be basically out of time.
Yes, we are. And I'm looking, we just completed that return bar here on that M1 candle. So, fellow traders, I hope you had a fun and safe weekend, and I'm going to wish you a profitable week. And I want you to always remember and never forget, It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.